Now, elections are not, it's still a buyer's market for South Africa's property sector. The expectation for pent-up demand is should a rate cut come into play and if a worst-case scenario is avoided in the upcoming election. Renier Kriek, MD of Sentinel Homes, joins us to discuss the potential impact of South African politics on the local property industry. Renier, an absolute pleasure and a good afternoon to you.
Good afternoon, Olutando.
Right now, people often don't draw direct lines between politics and the housing market. But of course, that's not quite the case. Let's talk about how the one plays into the other.
Yeah, I think elections are a very important factor that play into all markets, and the property market is no different. It has some distinguishing features, such as the relative illiquidity of the assets that are involved, etc. But there's no reason why elections should impact, say, the market for equities, listed shares, and not impact on other markets like property as well. And so I think that's an important corollary. You know, it's a market like any other and suffers the same impacts.
Now, are we seeing an actual drag in the property market at this point, Renier? And if so, is it from a buyer side, the seller side, or is it overall?
So it's very difficult to make vast generalizations. In South Africa, the property market is quite diverse and often misunderstood by people even who are involved in it. The market in the Western Cape, for instance, is something totally different, say, from the market in Gauteng, and the market in the Free State might be totally different from the market in KwaZulu-Natal. So the fact is that there are certain areas where there is significant activity, but if we look at the general statistics, volumes are down, and we would expect that, given that fixed capital formation and large capital expenditures seem to be muted historically in times, where we're heading to the polls, and we're in a relatively high interest rate environment compared to, say, 18 to 24 months ago. And so there is a bit of lag on the market, and volumes are down by about 25% on average.
I must actually ask you, Renier, if it's possible to, know how much of this 25% lag is due to the high interest rate environment, and then how much of it can be, attributed to the political uncertainty that an election year brings.
Yeah, so that's a very difficult thing because, the economy is exceptionally complex and the precise magnitude or amplitude of the effect of any particular variable is very difficult to distill. What we can say is that historically we know that elections lead to uncertainty, and that sentiment is the driver of the number of transactions in any market. And given that the election likely creates hesitance or a negative sentiment to the extent that politicians are running their mouths, so to speak, we can expect that will have a dampening effect on the market. Whether the high interest rate is the real dampener or whether the election is the real dampener is difficult to distill. We can definitely say that both those things are having an impact on volumes, and that we expect, firstly, once the election outcome is known and is acceptable to the market, and secondly, once we know that the interest rates are coming down, we know that the pent-up demand will spill into the market. People buy and sell property because their life stages change. And people's life stages have been changing unabated in the background, notwithstanding the fact that we have high interest rates and that we have an upcoming election. And so, whether your children have moved out of the house or whether you've welcomed a newborn, the fact of the matter, these kinds of life changes are creating a demand for you to trade property, and those trades are not currently being seen in the market. So we expect for them to happen, once there's a positive signal that the market interprets as such.
Let's also then touch on the fact that it is a buyer's market to some degree, but it isn't a seller's market. Renier, help us understand that supply and demand discrepancy.
Yeah, so the number of properties hasn't changed significantly, right? So increases in supply or increases in demand are not really the thing that we're talking about. In South Africa, we're a net increase in demand type of property market. And what I mean by that is that there are a lot of people who don't have access to the formal property market yet, or who have insufficient access, who are coming into the market as things change economically and politically. And so what goes down in the South African market must come up again. That's just the rule of the structure. And so what's happening at the moment is that sellers are reading the papers too, realizing that now might not be the best time to trade property, and so are holding back stock. That's what the estate agents are complaining of. The sellers who are in the market either have unrealistic expectations, given the state of the market, or are forced to sell. And so there might be some forced selling happening, although we don't really see that in the statistics. What we can also see in the statistics is that investment buying has increased quite significantly. Generally speaking, about 1 in 20 or 1 in 25 property purchases in South Africa is for investment purposes. In the Western Cape, the most recent statistic is almost 1 in 3.
Wow.
So it's gone up from 1 in 25 to 1 in 3. And when we see these kinds of metrics, we know that the smart money is in the market. The people who have capital through the cycle are there looking for bargains and probably finding them, which is why we see such a high proportion of those investment purchases being made.
Speaking about bargains, I'm very keen to get your thoughts also on what it might happen when we see some sort of a release of this pent-up demand. Might we see property prices increasing just based on the laws of supply and demand?
Well, property prices have been sort of increasing in the background, depending on who you believe. And that is once again a function of the base of the pyramid of demand in the market being very wide. And so we've never really seen nominal price declines. When we're speaking rand for rand, we've never really seen nominal price declines in South Africa. And we are unlikely, given the state of the market, unless there's some large shock to the system or some huge increase in structural inefficiency, to see that kind of thing manifesting. But so prices have been increasing. There are some areas, obviously, that are bigger beneficiaries of that than others. Segregation remains one of the leading trends in the South African property market, and the Western Cape as a beneficiary of that movement, that demographic shift, continues to see rates of increase, and obviously already has very high property prices compared to the balance of the country. And so prices have been increasing, but yes, I think we can expect a broad-based increase in price levels and the resumption of a sort of a normal property price inflation cycle as soon as we have two positive signals. First, not the worst-case scenario for the elections, and secondly, obviously, once we see inflation coming down, which will lead to the rate cut that we've all been expecting for some time.
And right now, I'm also keen to hear about this migration trend. Of course, it's people moving to the west, to the coast from inland provinces. I think the Western Cape being first prize. I think some of KZN also enjoying some of that. Is that leading to good property prices in the cities or in the parts of the country that are being abandoned, Gauteng and the likes?
Yeah, so the interesting thing about that is that if you open the beehive, then someone's going to come for the honey, right? And so as immigration has been driving sort of the property market, places that potentially have no structural or good reason to be cheap are looking cheap now. And so we've seen huge resumption in buying activity in, say, the eastern parts of Pretoria or the southern parts of Johannesburg, where there's now good value to be had. We mustn't forget that Gauteng is the tail that wags the dog. It's not. It has much more purchasing power than it has demographic size. So the population size is much smaller than you see from the purchasing power. And most of the property market is still in Gauteng. We mustn't forget that. It's just that there's been this balancing where people have moved to the Western Cape looking for service delivery or beaches or wine farms. We don't quite know why. We suspect service delivery. And that's just sort of balanced it. But the Western Cape property market, due to various reasons, is not adjusted by increasing the stock that's available. And so the large demand has led to an increase in price, which obviously is going to stimulate the creation of new housing stock in the Western Cape, and has already started doing so. But it's also led to the fact that now, relatively speaking, there are areas where that maybe places people are departing on immigration trains that are now looking very cheap and attractive. And so we've seen resumption of volumes in those areas.
Very fascinating insights, Renier. Thank you so much for taking us through this one today. Wonderful. That was Renier Kriek. He's MD of Sentinel Homes.